Hey guys, thanks. Hey, welcome Aditya. We have Suhit and Deepal.
Hi,
They already
thank you.
joined. Yeah, please introduce yourself if you can.
Yeah, sure. Hi, everyone. My name is Aditya. I'm currently based out in Brampton, Ontario. I am new into stock trading. I've just started it 3 months back, trying to understand. So just trying to invest based on what people suggest, but doing my due diligence as well at the same time. So I'm trying to understand more of a bit of the market, how it goes on and how it runs. And I know in one of the previous meetings that I joined, I think it was Javed or someone who was explaining about calls and options and other stuff, which is something which I want to learn as well in the future once I have a better understanding about the stocks. That's about me, Vijay. Thank you.
Hey, thank you Aditya. That's a good summary. I like you because you said you were planning for investing. Because I'm into the investing, not trading right now. And we have NK. NK,
Hello.
would you like to introduce yourself?
Hey, I'm Nine, and I'm joining from Houston. Thanks for setting up this call. Basically, I just wanted to understand more on, you know, uh, the basics of investing and also the difference between, the growth stocks and value stocks, and basically how do you identify them, and how do you basically deal with those stocks, when to buy and when to keep.
Okay, great. Yeah, that's the goal of this call. That's the agenda for today. It's a basic introduction for investing, and in future sessions we might look into the options, because options is not something different. Options and the stocks depend on the options trading, and the option price depends on the stock. Yeah, we will see them in future as Aditya has asked. And yeah, good. NK, you joined the call. So we have 4.
Okay.
Should we wait for a few more minutes? Let's start from 3:10.
Yeah.
Let's wait for some more people to join. Yeah, we are like-minded people. We are planning to invest here. Let me see. Someone has joined? No. Okay.
Yeah, I think, just to add, it's good to follow the market, but yeah, sometimes I think without understanding the true technicalities of stuff, you're just being swayed by, articles or swayed by calls that people make,
True.
as a reaction to an event.
Yeah, true. So yeah, that's true. Because there is so much news everywhere now. Whether you like it or not, we are being pumped with news everywhere. It's information overload where we live,
Yeah.
and we can easily get brainwashed by some news. There are advertisements everywhere. Whether you use Google or any phone, they are fully loaded with advertisements.
Yeah.
So we have to do our due diligence. That's an important thing. Yeah, and that's the goal.
Yeah.
Let's learn about the market. My understanding is we are humans, we are all driven by emotions. There are 4 basic emotions which drive us while we are investing or trading. First thing is the greed. Someone else made money, so why can't I make? That's true, valid. We have the enough knowledge, that's true. But the greed is one important factor which might drive us. Other thing is fear. When the market crashes, everyone is selling off, the prices are dropping. Oh, I don't know what to do. Let me just sell. So that's a fear.
Yeah, sorry to interrupt. That was another question I have. So basically, when or majority of the analysts are hearing about an upcoming crash or a correction, what do you normally do with long-term stocks that you have? Do you sell it or reduce it, or what is the best strategy when you think it's going to, or major analysts are expecting a drop, a correction?
Right. That's a good question. We will address that as well. So what do we do? It depends which approach you are taking. You are taking the ETF strategy, or you are planning to actively trade based on the leaderboard. So we have two strategies here. One is the ETF strategy, where you don't have to sell if you're following the ETF strategy alone, where you don't need to have any knowledge about the market. You buy once and forget it. Let's say you are using a retirement fund for buying stocks, which is RRSP in Canada and IRA or Roth IRA or 401k in US. So that's the ETF strategy. So where you don't have to worry about anything. You buy once, keep adding a little bit every month. That is one strategy. And the other one is leaderboard, where we can actively trade the stocks. I hope you answered your question. Let's see more about
I
it.
got that question.
You
So basically, the first option that you said, that's mainly for bonds, right? ETFs.
Yes, that's right.
Yeah, but what if you have a stock? If you are holding long-term stocks, normally what do people do? Do they reduce during an expected correction, or do they keep adding? What is the correct strategy?
Okay, good. They reduce the position.
Yeah.
Cut your position by half, or fully go to cash. Right. Okay. So we have one more person. His initial is P, I guess. Please introduce yourself. Okay, so we are 3:10 now. I guess so we can start now. So whoever joins later, fine, that's fine. Okay, let's start. So by talking to Aditya, Suhit, Deepal, and NK, I understand everyone is interested in learning, and we are planning to invest. Most of us are beginners who started 3 months looking into the North American market from last 3 months, 3 to 4 months. So let's start, guys. So let's first understand the difference between trading and investing. So we are planning mostly for the investing here. So buy once and never sell. That's a ETF strategy, right? When you buy gold, what do? You buy the gold, and you don't. Next day the price drops. What do? Do you sell the gold, physical gold, and then buy back by Friday when it's in the bottom, or you sell it again in the Monday? Or is it something like that you do when you buy gold, or you just buy and keep the physical gold at your home or locker? Right, that's investing. Yeah, so that's investing. When you buy and hold it for long term, that's investing. You may sell it after 5 years or 10 years based on your need. So that's investing. Okay, so I guess we are all clear. So what's the difference between trading and investing? Then in investing comes value and growth. So most of us have heard about Warren Buffett here. Yeah. Yes. Okay, so Warren Buffett is a value investor. So he's in market for last 60, 70 years, or whatever his age. Maybe he's an early investor. He started investing from his team. So he relied on the S&P 500. Right? You might have heard S&P 500. So it is the, so I don't have to explain what is S&P 500, hope. Okay, so he relied on the S&P 500. So basically he grew how the S&P 500 grew, right? It's more of a value investing. So he goes and buys stock when the stock is at a discount, or when the market drops to 30% or 50%, he goes and buys and picks a company. He doesn't just buy few stocks or thousands of stocks like us. He just goes directly to the board of directors and say, hey, give me the share. I want to be a part of the board of directors, right? So we are not in that level, but there is just an example of the value investing he did. And he grew, and the S&P 500 market is there for more than a century, 100 years, right? And the other one we are comparing is NASDAQ 100. It's a 100 non-financial companies. So most of them are from the technology stocks, tech heavy, and a little bit of healthcare. So if you see the value investing worked on finance companies and energy companies. And these two sectors give dividends now, right? But if you come for growth investing is based on the NASDAQ 100, which is a relatively new market. And it's been there for last 30-40 years. I don't know the exact year or the decade where it started, but my understanding is 30-40 years. And it's tech heavy. Apple, Amazon, Google, Microsoft. These are called FANG companies, right? The top 5 companies. These constitute half of the market share in S&P 500 as well. S&P 500 companies, but the volume or the weightage they give for these 5 companies is less in S&P 500. I can explain this with some Yahoo Finance if possible. Maybe let's say we have QQQ here. Let's start with QQQ. I have shared this already in group. So if anyone already know, you will relate it. If not, you will understand anyway. So this is QQQ, which follows NASDAQ 100. And look at the top holdings. Apple, 12%. Microsoft, 11%. Amazon, 10%. That's already 33% of the top holdings. The remaining is Facebook, Google, Intel, NVIDIA, Adobe, PayPal. So this constitutes about 40% almost, 40 to 50%. Right, so this is QQQ, which is tracking NASDAQ 100. Let's go contrast it with SPY.
So QQQ is an ETF?
Yes, QQQ is an ETF. Okay. That's right. Okay. It tracks NASDAQ 100. Right. 100 list of companies, right? Let's go to QQQ, or let's move on to SPY.
Right.
Look at the top holdings. Same, Microsoft, Apple, Amazon, Facebook, Johnson & Johnson. This is the new one which we are seeing in this list, right? And Berkshire Hathaway. This is the Warren Buffett's company. Visa and Procter & Gamble. So look at the weightage. I think it's increased now recently. Earlier it is 4 or 5%. They keep changing it. Let's see what's the percentage here for Microsoft, Apple, Amazon, and Facebook. It's 15, including Google. Maximum is 16-18%. Right. So that's the difference. Because it's a list of 500 companies, they have to give weightage to the other 500 companies. So, and SPY is based on value investing, and QQQ is for growth investing. Is that clear? Yeah, go ahead with your question. And your name, please.
Oh, this is Suhit. So, probably it sounds a little dumb, but I'm going to still ask, right?
No problem, no problem. Yeah, I just rushed. I believe in that case.
Absolutely. I think, at least myself, I can talk for myself. I'm going to clear some of my basics while you actually help me understand some of this, right? So when you said SPY and QQQ as ETF, right?
Okay.
And you said they changed their share
could you type it?
Of these specific companies. Oh, is it? Okay. Yeah, I'm going to type it.
Right. Great, thanks.
Yeah.
Okay. Okay, while we get the question, maybe I can explain something more. Okay, there is something called dividend or ETF. Okay, the question is ETF and mutual funds do both change the qualities of the share?
Oh, sorry, I mean,
okay, let's understand the difference between question again, because most of us get introduced to mutual funds because we had some good balance in bank that's our salary account, and the bank find. Could you type again? I didn't get the question clearly. Sorry.
You able to hear me now, or is still breaking?
There was some disconnect. I apologize. Hope everyone can hear now.
Yeah, I can hear you.
Yes.
So I'll wait for the question from Sohit between mutual fund and the ETF. Can someone just reply or say, are you able to hear me?
Yes, I can hear you.
Oh, thank you. Okay, thanks. So the mutual funds are run by large corporations, right? When we hear about mutual fund, when our salary is sitting in a bank, the bank calls us and say, hey, why don't you get some tax rebate? Yeah, thank you. Why don't you get some tax benefit? Come and try our mutual fund. So that's how we might have got introduced. Everyone might have got introduced to mutual fund, because the banks or any organization won't promote ETF, right? The mutual fund company.
You're breaking again.
Yes. Thank you guys for speaking myself. I hope it's clear now. Hope it won't disconnect now. Thank you.
Yeah, we can hear you.
Yeah, thank you. So hope you understand. Did you guys get what is mutual fund?
Yeah.
Okay. So mutual funds are not traded in exchanges. So if you have a brokerage account, most of you might have already have some brokerage account. For example, Questrade or the banks in Canada, or Interactive, TD Thinkorswim. That's a brokerage, right? So brokerage won't sell any mutual fund. They might have their own. They might have their own, what they say, portfolios. And whatever we are trading is called self-directed, right? So what we do is self-directed. Whether you do day trading or swing trading or investing, it comes under the category of self-directed investing. Right, before we go to mutual fund and ETF difference, I'm just explaining what is self-directed. So we are all coming under this category. So I don't have to explain this. I'm just telling the terminology. Self-directed investing. That's it. Now let's see what is ETF and mutual fund. I hope I'm answering, getting close to Suhit's question. Just check what is Suhit's question.
Yeah, I think I was trying to make the point that both ETF and mutual funds change the amount of or the quality and quantity of shares in their holdings. Okay, that's right, Suhit. Yeah, they try to change. Yeah, now your voice is clear. So that's right. They try to change the quality and quantity. The requirement for NASDAQ 100 companies is they say the top 100 companies by the market share. Right, that's a quality right. NASDAQ 100 demands. S&P 500, I'm not sure what criteria they have in choosing the 500. There'll be some kind of criteria which is proven. We are doing it for last 100 years. Right? That is definitely right. That's fine. Okay, maybe this is a different topic. Let's go later. Let's focus only on today's session. Okay, so how they track? Okay.
Let's go by the market share. So S&P 500 is a index, and SPY is the ETF. So this ETF also has a market share. So what's the market share here? Net assets. This is the market share, which is 274 billion. Okay. Compare this with say Apple. Let's compare the market share of Apple. Apple's market share is 1.9 trillion. Okay. 6 months before, Apple, Microsoft, and Amazon were competing for 1 trillion. That was a milestone. 6 or 7 months before, Jan or February this year, if I'm correct about the timeline. But what happened, if you see, guys, there was a market crash, 30%, and then there is a 30% crash here. And where does all this money come from? Do you have any idea? Anyone can answer?
I was always wondering that.
Good. Okay, so where it came is, my understanding is there is a quantitative easing or a stimulus package of $3 trillion after the coronavirus crash, which happened by end of the March. Right? So all these were given to, I think, all the companies, right? All the small business, big business, everything. But finally, where the money went to, if you guys think, 900 billion or 0.9 trillion came to Apple. The next one is Microsoft.
Oh,
What's the market cap? 1.6 trillion. So another 600 billion came to Microsoft. Right? So if you take the top 5 companies, all the $3 trillion came to these 3 companies, or at least 90% of the quantitative easing they gave. So does it answer your question? Or your, yeah, you're wondering, right?
So is it not? Okay, is it not, because my understanding was people, because of the market bull run, people have
Right.
moved from bonds and other low rewarding investments to put into these companies because of the run.
Right, it's all interrelated, right? If you see, stock market doesn't reflect the current economy.
Yeah.
Current economy is in trouble. It's a kind of slow thing, right? It's not like something, oh, the market crashed 30%, right? That's fine. But now if you see, there is jobless thing happening, and work is not fully resumed everywhere. So everyone trying to work from home, at least the people in technology. But what about the manufacturing industry, or where you have to physically present, right? The economy is in real trouble. And the stock market is not reflecting that. It's always projecting towards 3 months. Right.
Right.
why is that happening?
Why is that happening? Because we always look in the future, or the stock. That's how the stock market works. What is the future? Does Tesla has a value, or Apple has a value, or Microsoft has a value? They see how it is valued. Oh, 3 months, it's going to be up, so let me buy today. So everyone is jumping in, right? That's how it works. So we will buy. So now we are ready to buy the gold, right? We didn't think about gold in last 6 months. So now we are thinking about gold, right? Why? The market might crash in another 3 months. There is election, 90 days.
Right. That's another question. So what stimulates a crash? What is the catalyst for a crash? Is just selling or anything else?
Yeah, fear, selling, fear, profit booking.
Fear of about what?
Market crash. That's why it's a ripple effect. That's how it happens, right? Whenever the market crashes, it happens in 1 or 2 months. The last crash, it just dropped 30%, which is one month, I believe. Historically, the recovery is supposed to be slow. It takes 2 to 3 years. But now what happened? In 4 or 5 months, it recovered more than the previous one, right? In the beginning of the year, Apple is competing for the $1 trillion market cap, but now it is close to 2 trillion market cap. How this happened? Yeah, there are a lot of questions. Yeah, let's focus on the growth investing and the leaderboard, which I planned today. Right? We can have weekly discussion. Definitely, these kind of questions we are ready to discuss. I'm interested. right? Okay, so
Yeah.
how? Okay, so now you guys got some idea about growth investing, right?
Yeah.
Even in the group we discussed, there's something called DDOG, Datadog. It dropped drastically to more than 20%. Why don't I buy that? The reason why we don't buy that is it's a growth investing. So let's move on to a company which is in growth mode. Okay. Okay. I think I covered some part of growth thing. If you still have question after the end of session, we can continue about the thing. Let me introduce you guys to a leaderboard, which I'm already sharing in the group. This is a paid subscription from IBD. And this is sponsored by Karthik, one of my friend in the group. So let's see how to start with. Look at the first thing, look into this one. Market in confirmed uptrend. Is it the right time to buy? Everything is all-time high. Should I buy Apple now or later, after, before the split or after the split? Apple is planning to split 1 to 4. Microsoft is already overvalued. Amazon is above 3,000. I can never imagine buying Amazon. Should I really buy? All those questions, should I buy or not? First look this one. Market is confirmed uptrend. This means it's 100%. You can stay invested. Right? Is the right time to buy. That's right. So next thing, which one to buy? So someone has no idea what is market, what is the, I would recommend ETF strategy for them, ETF market strategy. So every day I'm providing this update, right? Even just spend 5 minutes reading this, that's sufficient. You don't have to read Yahoo Finance or Google Finance or any specific website. You don't have to, just read this one. What happened with QQQ on the day? Maximum 1%, 2% up, that's a normal day. If something bad happens on the day, it drops 4 or 5%. If something good happened, it will rally to 2 to 3% every day. Right? Similar thing for SPY and similar for Dow Jones. That's a group of 30 industries. That's the index of 30 industries. Okay, so this is ETF strategy. So buy in little quantity and sell it after 5 years or 10 years based on your goal. Keep buying, don't worry. The reason is, let's take QQQ. Let's say someone bought QQQ when it's all-time high at the end of February or the beginning of March. Let's take the 6 months graph or one year. Let's say I bought ETF here, 234. Within 3 weeks, it dropped to 170. I see that as a good buying opportunity, 170. But worst case, let's say I bought it here. I don't have to track the market. It came back to 234 in June 1st. From June 1st, even if I invest in June 1st, the market is already back up, or should I invest or not? Don't worry, still invest in QQQ. It came to 270 now. It's simple, right? As simple as it is. Instead of holding cash, should I buy gold or should I buy ETF or where to invest? I don't know, Apple. It's already all-time high. Just buy QQQ, forget it. This works really well for retirement accounts because you're not going to sell it tomorrow. Right? This is ETF strategy. How to use the ETF strategy? It says 100%, stay 100% invested. So there are 3 states. This is like green, 100%. Then the next one is 50% cash and 50% ETF. That's like a yellow signal. Cut your positions, sell half of your holding. Let's say you have 10,000 worth of QQQ. Sell it for 5,000. Keep 5,000 in cash. And when they change the market to downtrend, that's when they say percentage invested is 0. So that time convert all the QQQ back to cash. Simple.
Okay. So so that what you're saying is this kind of this gets updated every day, or does it get updated every
day? This is the last week's update. Every day. Okay. I am sharing these in the group every day. Every day evening. Okay, guys, there is a limit of 10 minutes with the Zoom. If call drops, please join back if you are still interested.
Right.
Okay. Mostly the call will end in 10 minutes. I would like to talk to you after 10 minutes as well. Thanks. Okay, so I'm sharing this every day. You might have seen this sometimes in the 6 p.m. or 8 p.m. or sometimes in the morning. If I don't get time in the evening, I'll share it latest by the next day morning. And this Friday I didn't share, and I shared it on a Saturday evening.
Right. Right.
So this way you don't have to look into the minute by minute or hourly updates. We are investing. You don't have to worry. If you are the same, it's the same approach by the mutual fund companies. They don't allow you to trade during the daytime. The previous day's closing price they take, and they buy it the next day for you. It's the same thing. We just have to be disciplined. Don't go by the news. If you cannot follow the news, if you say no, I am new to this, I cannot follow the news, don't get scared in the middle of the day. Wait till the end of the day. You can take a better decision by end of day. Okay. So this is the chart for QQQ, the Nasdaq 100. And there is another thing. So is that clear? So this is the ETF strategy, and we have just 3 signals: stay 100% invested, stay 50% invested, or 0%. So based on that, we can switch between. I'll tell you how this works in the graph. So here, under
a quick question, Vijay.
Yes.
Yeah. So this leaderboard we are looking at, is this a separate platform, or there are like the other providers? They also provide similar kind of predictions.
Yes, that's right. So it's provided by investors.com, and they are focused on the growth strategy, not on the value strategy, not the value investing. Growth companies, right? And they are using QQQ as the primary tracking ETF. But you cannot leave the S&P 500 out of the picture completely, because he's the big brother. S&P 500 is old brother. He will definitely have an influence on QQQ, right? So it's mainly focused on the strategies, growth strategy, and they have leaderboard, they have other products. So for our investing purpose, this is the best one, and this is it needs a subscription, right? And there are some
see,
other.
and it requires a subscription, right?
Yes, that's right.
There is nothing free.
Yes.
Okay.
So they have some research. You can go through some research, all these things. You can learn definitely from this. I have been tracking this one site for last 3-4 years, and that's when I gained some knowledge. Okay, and they have out of the 100 companies in Nasdaq, they pick 50 companies, top 50 companies, by some AI are looking to the fundamentals. So it's automated one. They pick the 50. So from that 50, the team, the IBD team, they have some team, right? Someone is working for us. So they will choose the leaders, which is in the leaderboard. So it's easy for us.
I see. Thank you.
Okay, let's move on to leaderboard. So I said 50 companies, right? So there is a full list of 50 companies and the top 10 companies. We can just quickly check. So before they identify the company in the leaders, they will pick it from here somewhere, right? Let's see what's the top 10 companies. It keeps changing every day. It's loading. So this is a list where how it is removed. Netflix is added now to top 10 list, right, on Thursday or Friday. And then there is another company, Teladoc, is removed because Teladoc dropped. There is some merger with Teladoc and other company related, similar one. Anyone know which company is it? Okay, there is some merger happening with Teladoc, so it is removed.
It's merging with Fastly.
Fastly? Okay. No,
Yeah.
Fastly is different, I believe. Fastly is a cloud platform, and maybe I'm wrong. Let's see that later.
Oh, sorry. Livongo, sorry.
Livongo, you're right. Yes,
Yeah, Livongo.
LGVO. You're right. Got it. Yeah. Okay, so this is a list. It's getting updated. Let's go to, okay, now, if someone cannot follow the market, don't worry. You have ETF strategy. You just spend 5 minutes every day. Fine. But let's say someone wants go a little bit over and above the ETF strategy, where they know what is Apple, they know what is Microsoft. They can follow the individual company they want to buy. So for them, there is a leaders near buy points. So currently, these 4 companies are near buy points: Adobe, Domino's Pizza, Microsoft, and Oli Bargain Outlet. I don't know about this. Maybe someone in US might know it already. Okay, these 3 things entire world knows. Okay. For example, let's take Microsoft. I think I shared this, but I will take again the chart from Microsoft, for example.
Vijay, quick question.
Sure.
You mentioned about the leaderboard and you mentioned about add and removes, right? Would that directly translate into buys and sells?
That's right. Oh no, that is just a computer picked one. I'm sorry. There's just a list where to look, like where to watch. Let's say you want to. Let's say you cannot track the 100 list, right? So why do you want to 100 companies? Because S&P 500 is huge, 500 companies. It consists of 8 different sectors. It's not possible for me to track. Then I move to NASDAQ 100. There's 100 companies. There are 100 companies, non-financial companies, but the major ones are tech and healthcare. Then these IBD, they picks 50 companies out of it based on some program, automated program. So we cannot rely completely on the automated program, right? So then someone has to pick it for us. Then they choose the companies which are nearing the buy point using the chart analysis. Is that clear?
Okay.
Thanks.
Yeah.
Okay, let's take Microsoft. They say near buy point, right? So these 4 companies, it's ready to buy. If you are say, okay, I can track one of these companies, I'm ready to buy. I would like to make some profit on this. Go ahead with these 4 companies. So right now, Microsoft buy point, the last buy point is 180. So those who entered in 180, at 180, where is that? It's here. That's in June, April end or May 1st. That's April 30. Or where, sorry, somewhere here. Okay, this is the range. 180 is the buy point. So they gave a buy signal here. And the alternate entry at 187. And the next one is now. Next best time is now. Okay. And the sell signal comes like this. Hits 20% profit, 25% goal at 178. Because whoever bought at 140 and 142, they can sell it at here, at this point. Right? And when they say sell, after that there is a crash. See, let's say you bought at 140. When? September 2019. Not so far. Just 9 months before. Or 10 months, 10, 11 months. Yeah. Let's say you bought at 141. Sell it at here when they give a sell signal of 178. You made some profit on this, right? 20, 30% profit, 20% profit. Then the market crashes. You re-enter at here. They say rise to 3/4 position on April 16th. So buy it back. So if you already in the market or you're a new buyer, buy it here. And there is a indicator or a chart pattern called cup and handle. This is a shape of a cup with a handle. So that's the breakout point. So from there, you cannot stop Microsoft. It keeps going up. That's when they give a buy point for 180 and 187 alternate entry point. And now it keeps on going. So this chart is one example for the rest of the companies. So this is what I would say, like, if anyone finds, if anyone needs a chart or buy point, just request me. Instead of I am spamming the group with all the companies, please send which one you like from this list. I send this list once in 2 days or every day if required. Right? These 4 are the companies which we can buy now in buy range. We can watch chart for each of them. And if required, I can provide a list. I can narrate about this chart each for 5 minutes or 10 minutes and record a video, and anyone can watch anytime. We can plan it in future. Guys, if the call drops, please join back. Okay, so these are the 4 companies in buy point. So what about who is already making profit? Amazon, Apple, Chegg Inc., Chipotle Mexican Grill, Cloudflare.